So I can actually I click on this thing for that. Okay, done. We're
Right.
live. Sorry, I just drank a wellness shot and then it tastes exactly like a spicy version of a salad dressing. So basically, it's very intense right now.
Good way to wake up.
I know, right? Hi, Vignesh. Welcome to Venture with Grace.
Thanks, Grace.
To start the show, I would love for the audience to get to know you a little bit more. So you started your career in um, well, I feel like you have been in the same firm for 12
I,
years. So
I
like
have, yeah. I was
that's like a crazy career.
banker before, but I've been with Sierra for almost 13 years now. Started
Congrats.
with the firm back in 2013, and right around the time my partners had really taken over from the old generation, and so been here since I would call the beginning of Sierra 2.0. And been a super fun journey so far, and so I've seen 4 funds now and a lot of companies over the years. So
For sure. Why don't we start with, although like we previously had one of your partner on the show, but I want to start with like, for the people who the first time hearing about Sierra Ventures, why don't we start with like the fund itself and then fund size, fund like the focus. I know that you guys invest in primarily enterprise, and why don't we talk about the general scope of like what the fund is focusing on?
sure, yeah. So we're currently on our 13th fund. It's a $270 million fund. We raised that in 2023, and we've always had a focus, again, since for the last, I would say, decade plus, of investing in early stage. So that's everything from inception all the way up to Series A, and B2B software is where we primarily focus. We use the term B2B to be broad a little bit on purpose. So half the firm covers infrastructure, so everything from the foundational model layers to data infrastructure, so on and so forth. In this new AI world for enabling AI applications. And then the other half, we spend time in the application layer, investing in the enterprise AI layer, vertical AI layer, and so we cover the entire spectrum of B2B software. And for us, we find 2 things are true. One, because we've done early stage for so long, we know how to work with founders at the earliest stages. And 2, because we've done an early stage for so long, we've built a lot of programs and tools that help our companies scale. And so we really think we are the right sort of hands-on support to work with our companies. And by focusing on B2B, it just allows us to be very prescriptive and really help our companies in the most effective way.
Maybe we could start with like one of the companies that you guys have been invested in. I know that you guys are focusing on like I feel like subsectors beyond the general B2B SaaS. Maybe we could start with like a company that you invested in most recently, from how you meet the founder to how you diligence it to thinking about like the exit of the company to like eventually winning the deal and then getting stuff done.
Sure. So maybe I'll start with Fintery, which we did last year. So this is a company in the insure tech space. I had actually known the founder. She was a former VC. And so she used to be a VC, then became an operator in the insure tech space. And so I'd known her, known of the company, and been tracking it for some time. And so when she was raising her last round, naturally we had built a good relationship over the years, and that was part of the reason why we got the call. And frankly, that's kind of the way a lot of deals come to us in the first place. Is we have a pretty deep network, having been in Silicon Valley for so many years. And so a lot of the founders know about Sierra, know the things that we can do, either the founder themselves or their investors or somebody that's a part of their advisory circle, and sends them over to us. And so that was kind of how we got to it. And in this case in particular, going back to the comment I made earlier about kind of support, we built a lot of tools around the portfolio to really help our companies. One of the things we've done is we built this thing called the CXO Advisory Board. It's about 75, 80 Fortune 2000 CIOs and CTOs. And within that, we've actually gotten a pretty deep roster of folks in the insurance world. And so as we were talking to the founder at Fintery, we kind of leverage our CIO board in a couple of ways that are really useful. One, we make connections to our founders to during the diligence process. And it shows the founders that it shows the founders the power of our network and kind of who we're connected to. But two, for us, it gives us perspective and feedback from experts in the industry. And so this is something that we've been doing for, as you can see on screen, 20 years now. And I think it's a pretty powerful example of the sort of network that we have that we've built. And so this was one of the core ways that not only do we win deals, but we also help our companies downstream. And so the intros that we made, I think the founder knew that we were pretty deep in insurance, kind of had the right connections, and we could be helpful on the cap table. And ultimately, that's what allowed us to win the deal. And going forward, I think for us, as we looked at the category and as we looked at the space, insurance is an interesting market. There's just a lot of moving parts in insurance, and even insurtech as a term is really, really broad. There's so many things that you can do, but kind of the way we saw this company and what we found interesting was this company solving a core problem at the brokerage level where they're trying to help with commissions. And I just for the purpose of this conversation, I won't go too deep into it, but we thought that the wedge was a really interesting way to get into the money flow at the broker level. And by getting into that money or commissions flow, that gave them an opportunity to go build a really big company. And ultimately, this could be a standalone company if they build modules around that. And more generally speaking, the reason I kind of describe it that way is that's one of the things that I tend to look at when I try to look for deals in particular. A really, really sharp wedge that gets you in the door, that gets you unique access to data. And once you have that unique data access, it then allows you to go build additional modules on top of it. And I think in the SaaS world and in the AI world, this sort of theme will be similar. Obviously, in the AI world, I think the value of the data is a little bit different because you can train models and things like that. But you have to have a really sharp wedge and a really unique way to go and acquire the data. And we can talk about that. We can talk about that a little bit later as well. But that was our kind of thesis for why this company had a chance to go build something meaningful. That we were just seeing their customers. The demand from the customers is just, the pull was really strong. And so we felt that they had really figured out a sharp wedge. And now the question was, could we work with them and help them kind of think through what the vision could be and where to take the company? And we felt that there was an opportunity here.
For sure. Maybe we could talk about, I want to double click on you mentioned about having a sharp edge for for each deal that you're looking for. Maybe we could talk about the insurance industry as a general industry. What are some how does the money flow in the industry, and where does this company sit in the entire spectrum?
Sure. And I'll keep it a little bit broad, just because insurance is one vertical that I focus on. I spend time in kind of other different verticals as well, but in this case in particular, the way it works is when you buy a policy for whatever auto or home or life insurance or whatever policy, you are creating a contract with the agency, the broker that's selling you the policy. But the broker then has to go submit that to the insurance company or the carrier that's actually underwriting the policy. And along the way, there are lots of intermediaries and middlemen. But the point here is that once the policy is written, the insurance company basically is paying everybody out for paying out a commission for actually going and selling that product. And so what ends up happening is, in this case, the insurance companies will pay the agencies. The agencies will then pay their agents a set commission based on how much they've sold. But the commission calculation and the way these agents are paid is super manual. There are lots of mistakes. Sometimes agents get overpaid, sometimes they get underpaid. And so there's just not a lot of visibility. And for a brokerage firm, for an agency that's managing all this stuff, if they're overpaying, obviously that's bad for them, because that's lost revenue. And if they underpay, then that means agents are going to leave them because the agents don't feel like they're getting the money that they should have made. And then the flip side of it is, on the back end, a lot of these agencies have to hire finance teams and people to go basically do this work. And it's like a month-long effort basically to go and figure out what was sold and, reconcile what was sold with actually what what the insurance company says that you act with what the insurance company says you sold. And so it's a super complex process of actually verifying all this information. And so what Fintery wants to do is basically ingest the data, use AI to analyze what has actually been sold, and then automatically come up with the calculations for how much your agent should get paid. And so they're taking a month-long process, turning it into a minutes-long process. And ultimately what that means is the agents get paid on time, or actually probably get paid sooner and faster and more accurately. And for an agency, it allows them to actually be a lot more nimble and efficient in running their business. And so if you think about this from the perspective of an agency, the reason we've kind of thought this wedge was so sharp was that the number one goal for most agencies is to recruit the best agents and retain the best agents. And if you're not getting the agents paid on time and getting the agents paid accurately, you're going to lose your agents. You're going to churn agents. And so this is a top of mind problem for a lot of agencies, and which was why we felt that this was the right wedge. But if you think about this kind of 3-4 years out, one of the unique things that these guys are doing is that now as an agency, you start to get a better view of what people are selling. You have a better view of what products are working, what products are not working, what's being sold across the industry. And so we kind of want to become this data layer across all these different agencies that you can then, there's just a lot of things you can do with that data once you have enough of it. And so that's kind of the view, which is wedge is sharp, get access to the data. Once you have access to the data, what kind of additional modules can you build on top?
I wonder, speaking of data, maybe we could talk about like the entire new like AI trend. So like, sure. I feel like last year has been AI agent has been like a really huge wave, and I wonder like what would you predict is going to be like this year's like big like focus centered like words, or like is there any particular industry that you find really interesting, whether it's in the data space or
Yeah. So I don't actually have I won't talk about an industry. I actually put out a blog post about this. I think it was in September of last year, August or September of last year, which I can link to, send you a link to after. But the way I've kind of thought about this world is we spent a lot of time the last few years building out the tooling. People have been kind of testing agents and trying to get them to work. And I think people have a pretty good sense of how to at least build the agents at its bare bones level. So now we got to go from, call it 80% of the way there to the, get it to 100% of the way there to actually put these things into production. And one of the things that I think is always interesting about AI is that it's not like software, right? In software, it's very traditional. If it doesn't know, it'll tell you it doesn't know. But in the AI world, if it doesn't know, it's going to guess. It's probabilistic. And that can obviously be problematic, especially in areas like healthcare or financial services or what have you. And so I think for that reason, a lot of banks and a lot of large enterprises have been a little bit slower to actually push these things out into production in front of their customers. But if you kind of think about the way to solve that problem is with context. If you can give AI the right context for a given situation, the probabilities are that the AI is actually going to come up with the right output for that particular use case. And so in every single category, we think there are going to be these systems of context. And so if you think about banking as an example, if Grace is coming in and Grace is looking to open a new account, but I know Grace is a student, well, then I should go offer her a certain set of products and I should offer her a certain set of services based on the circumstances and based on the data that I know about her. And today, a lot of that information, a lot of the ways that a human would solve that is because a human has a lot of knowledge that's sitting in their head about how these processes work. And so now I think the goal of these next generation AI companies, obviously you got to build the agents and build the infrastructure, but it's really how do you pull that knowledge out of the human's head? How do you create that context graph, that context layer that can then allow you to become extremely efficient and extremely accurate? And I think there's a tech problem and a product problem here that needs to be solved. It's not a simple problem that needs to be solved. But going back to my wedge comment earlier, this is why I think that super sharp tip of the spear, that really sharp wedge is important, because that's the way that you get access to the data. Solving a problem for the humans, making it easy for the human to actually get them to give you the information that allows you to build that context graph is going to be super critical. And so as I think about 2026 and beyond, To me, in every category, in every vertical, it's all about owning and creating that system of context. Whoever wins that system of context, kind of like the system of record companies in the SaaS world, those are going to be the big winners at the end of the day. And again, I think there's a tech problem that still needs to be solved. I think there's a big product problem that needs to be solved. And so that's kind of what we're spending time thinking about and looking at as we look at these different categories.
I have, so I guess like I really agree with you on like the context part. So I wonder, maybe we could talk about the context layer in a little bit more. So like I'm an investor of early stage company. They recently went through YC. And so like they are, it's called Hyperspell. So they're working on the context layer of things. So maybe we could talk about like what are some different players in the context layer in the current stack of like the context layer of things right now, because I think like one of the challenges, like you have to make sure that data kind of like communicate with each other, slash like, you know, you have Slack, you have email, you have like all these different type of like form of data. So you kind of like combine them in the same place. But maybe we could talk about like, you know, what after you collect all the data and how do you give them context, like you mentioned, like, you know, there needs to be some sort of graph that like maybe a decision-making flow that like you kind of like as a human, you kind of inform the AI to make sure the AI understand what's going on. Maybe we could talk about like, in your observation, like what kind of companies are in the context layer right now and how is it kind of like functioning in the entire spectrum, basically?
Yeah. So I think, I think, you know, Grace, your company Hyperspell is super interesting. I mean, they're clearly solving a big pain point for a lot of companies that are out there today. I would actually argue that I think we're still in the very early innings of context. I think for a lot of companies, the way they think about context is still pretty nascent. And for a lot of companies, it's all about like, how do I actually ingest all the different data sources and the data sets that sit in your enterprise? And a lot of it is email and files and things like that. And so if I kind of just look at the stack today, I mean, really the way I would think about it is there's an integration layer, there's a vector database layer, there's a knowledge graph layer. And I think the combination of those three things is really what's kind of the serves as the, and maybe you can throw a memory layer in throw a memory layer on top of it as well. But I think those 3-4 kind of core components form the base of the context layer for most AI companies today. And that's kind of the bare bones stuff that you need, like that you need that in order to even build like any sort of workable AI for a customer today. To me, the next step and kind of where I see this going, and there's a pretty interesting article I think came out a couple weeks ago about traces and observability. But I think the next set and the next step of the next set of problems, or the next step that needs to be solved is, okay, great. Maybe I'll give you an example here. Let's take a CRM as an example. This is an example I use quite a bit. Today, the CRM, if I show up into an AI-enabled CRM, the AI-enabled CRM is very good at telling me, hey, you know, here's a customer, here's kind of the history of the customer, here's an email that I can write for you to kind of push this thing forward. But effectively, it's still using probabilistic methods of, hey, you know, here's kind of like what's happened before, here's kind of what you should expect next, and that's kind of how the system is generating that next best action. But imagine a world in which a CRM kind of knows who you are and knows kind of your day-to-day pattern, right? Like, for example, if I come in on Monday, well, Monday I do my pipeline review. So the CRM should show me my pipeline review. It should understand that bit of context, right? That workflow of like, hey, the pipeline review happens on Monday. So let's go through and like, let's create the pipeline review data that you need to present to your team. On Friday, hey, it's Friday, you need to follow up with the customers that you talked to during the week so that, you know, the deal doesn't get lost over the weekend. So let me write you your follow-up emails at the end of the week, and I'll target the ones that you talked to or the deals that are moving quickly. You're coming to the end of the quarter. Hey, you're coming to the end of the quarter. The deals that are going to help you hit your quota for this quarter, like let's prioritize those deals and let's help you move those forward. Those little nuances, I think, are still process problems or process data that most companies haven't solved for. And I think that can be solved by, there are traces that I'm sure you can get, but a lot of this is, how do you get the user to give you that information, right? Like, how do you get the user to give you the information, to give the system the information that, hey, my quarter ends here. Here's kind of what my quota looks like. Here's what my typical process looks like. Here's what my company's like. Here's what my company requires. All that information, I think, still hasn't been unlocked. I think we're still kind of at that first level where it's, how do I ingest a bunch of documents? How do I read all the documents and then kind of cluster them together? And then when I do a search, or when I try to write an email or whatever, I can, I have a better sense of what's next, like a next best prediction sort of model. I think we're still at that layer, but I don't think this notion of like true personalization and true contextual AI has shown up yet. So anyway, long-winded way of saying, I think the base of that kind of context stack has been formed today. I think you have the vector DB layer. I think you have the integration layer. I think you have the memory layer. But that last mile human kind of, or user context piece of it, I don't think that's been solved. And we can talk about some of the techniques and things that people are talking about, but it feels like we haven't solved that just yet.
For sure. Can we also talk about like how much money goes into each of the layers, and how do you, like, as an investor, like how do you make decisions on like where do you spend your time on? And I guess like when you are encountering a lot of deals happening in these different stacks, like where would you say is like you are having the most amount of success with when it comes to sourcing the quality deals? As I feel like it sounds like it's just like pretty, for each specific subsector, it's a really important problem, but it's also a very niche thing. So is there anything that's like doing it end to end so far?
Sorry, maybe just repeat that last part of the question. So
Oh yeah. So
yeah.
I guess like the question is like, maybe we start with like the money side of things. Like
Yeah.
in this entire stack that you just mentioned, there is different sub segment of like how the information is processed. I guess like which step makes most amount of money, and then how
Yeah.
do you invest your time into like hunting down the companies in that particular
step? Fair. Okay, so I think, to me, I think at the end of the day, the value is all going to accrue. A lot of the value will accrue in the application layer. I mean, we kind of saw that in the SaaS world as well. Obviously, so far, most of the value has accrued at the foundational model layer, and for good reason. I mean, the things that the labs are doing is really, really just phenomenal. So totally understand why the value has kind of skewed towards the foundational models today. But this whole notion of this context layer that I've been talking about, I think ultimately that sits at the application layer. Your context, or the context layer, is going to be very use case and persona dependent. And so as an example, I don't think the foundational models are going to build a context layer for like sales use case, or for a healthcare use case, or whatever, right? And so to me, the application layer, and this goes back to the product problem that I talked about. How do you actually build and design a product that gets a user comfortable enough to give you all the information, whether it's like your quota or your company's process or whatever? That's all going to sit at the application layer. And so to me, that's where I think the value will accrue over the next 5-10 years. And so that's kind of where we're spending time. And it's been interesting so far. I mean, I think we're seeing kind of two types of founders really emerge. One are these like very young founders that just have have this ability to think outside the box and be very futuristic in the way they think about the problems that need to be solved. And I think just the fact that they don't have any pre-existing misconceptions or pre-existing notions about how to solve these problems, it just gives them a very fresh perspective on how to think about things. And so that's kind of one bucket we found is a really interesting bucket. The second bucket are the repeat founders, the ones that have just been successful. I think for them, they all see this opportunity in AI. They know kind of the lessons of like, hey, here are the things that obviously they did things right in the last time around, but also I'm sure they have these lessons of things that they could have done differently that they're bringing as they build these new AI products. So that's kind of been the two personas so far. I think a third persona will also emerge in 2026 and 2027, which is the, hey, I've been at a Harvey, or I've been at one of these like very fast growing, high flyer application layer AI companies. And I've kind of seen I've seen how the sausage is made, and now I'm ready to go do my own thing. That persona, I don't think we've seen as much of just yet, just given how early the space is. But I think there's been enough AI success that persona is going to start appearing starting this year and next year. And so that's kind of another area where I'm spending time kind of trying to hunt for founders.
For sure. I wonder, so in terms of like, so I want to also go back to something you mentioned earlier. So you guys have like CXO network for the advisory board. I wonder, how does the advisory board function day to day? Because I think a lot of VC firms have some sort of like advisory board. I think some are more like high level, like, people just put like executive space on their website. And then two, there is like the LPs of sales leader, and then every day they're screening deals. So like on that like different spectrum, like how I guess involved are the advisory board for you guys are? And the other questions is, on the day-to-day basis, like how do you make sure that, like, for example, like a lot of the advisor for their own kind of like intentions to kind of like learn about the new technology and like, being able to like know what's going on. It's like the newest trend as well. So like, I guess like, how do you guys like kind of like function like systematically to like make sure that like, so for example, we have like, probably like 6 company this week that we want to ask our advisor for advice for, and then like, do we have like a meeting? Because like I'm an advisor for skydive companies, and so there is like recurring meetings that people would all jump on a call, right? But I guess like for the advisory board, is that like, every month everybody join like a Zoom chat, or is this more towards like, we're just in a Slack group, if we need so and so's help, we call this person? And how do you kind of like, but like when you call this person, do you give them like 10 company that you are currently looking at to ask their feedback, or would it be just like one-on-one time that like you spend 5 minutes to be like, hey, texting them like, is this something that you would buy from your company? So how does it kind of like actually work?
Sure. So these are actually two kind of related, pretty related topics as far as kind of the way we do it. So as I mentioned earlier, and I think as the audience saw on the screen, so we've been doing it for 20 years now, and one of our core themes and core things that we really focus on is we try not to flog our wares, is kind of the phrase we use, and the idea really is. With a lot of these CXOs, and we also have another group that we run called our Engineering Product Leader Council, which is kind of analogous to the CXO board, except these are engineering and product leaders from kind of fast growth startups, scaled kind of call it mid-sized small enterprises, but very heavy tech practitioners. And so I just kind of just keep those two kind of programs in your mind. And the core of kind of this don't flog your wares idea is that all the folks that you see on this page, the folks that you saw on the CXO advisory page, these are all very close friends of the firm. And these are all personal relationships that the partners have kind of built and cultivated over the years. And the way we kind of loop these folks in, and the reason we ask them to join us, is we tell them like, hey, look, we meet interesting companies all day long. You obviously have problems that you're dealing with at work. And look, for the most part, these are very busy people, like 90, 99, 95% of the time, it's fighting fires, dealing with internal stuff. But the 5% of the time that they have, that they actually want to learn about what's coming next, stay sharp, stay ahead of things, we want them to trust us as the people that are going to send them interesting, relevant information that's going to help them and is going to help them get smarter. And so that's kind of the core of it. And so if you kind of think about it from that lens, one of the things that we try not to do is, like, I'm not going to send every company I meet to all these people, right? That's just not fair to them. It's not like that, just wasting their time. And so we really try to be thoughtful and methodical and really try to curate kind of the way we send intros. Even in our own portfolio, obviously, we want to be helpful to our portfolio, but we also know that there's a right time and a right place for these intros to happen when they become most effective. And so I won't share the details of the company names, but I'll just give you an example of this. We've had a company in our portfolio for almost 5-6 years, and about a year and a half ago, we had one of our CXOs of one of the very, very large company, very large Fortune 500 company fly out to our office. One of the things that kind of happens, going back to this whole point of them trusting us, is that when these CXOs, usually they do a Silicon Valley tour once a year just to go, talk to the big Googles and Microsofts and all that stuff. But they usually end up making a stop at the CR office. So they'll spend half a day with us. We'll kind of line up a bunch of companies, line up some top content for them, and just, again, help them get smart in half a day about kind of what's happening. But on one of these trips a year and a half ago, we had our portfolio company fly out from the East Coast to come meet this person face to face. The two companies kind of had already had a conversation going, but ultimately what ended up happening was, as a result of putting these two people in a room together, we actually ended up getting them an 8-figure deal that ended up getting signed as a result of that intro. And so the reason I mentioned this, the reason I mentioned this story is that it's really important to get the timing right. And it's really important to make the right connection at the right time. And so our job is to kind of know what all these folks on the CXO side are thinking about, what are their problems. So when we talk to them quarterly, or whenever we talk to them, we always ask them, like, hey, what are the top problems? Like, what are the things that you're thinking about? What are the problems that you're facing? And so we always kind of have like a checklist in our mind, in the back of our minds, like, hey, this company, these people are like, here's what they're thinking about. And so we know what they want to see. And so as we meet companies over the course of the year, as we kind of hear from our own portfolio, we're always kind of tuned to that. We're like, hey, I know, what this person is saying, like, I've heard somewhere else. And so then we'll go make the connection. And so the idea for us is not to try to just put everybody into a room and let things happen. We just try to be super, super methodical about it. And what ends up happening is the intros are very high leverage, and people feel like we're valuing their time and valuing their opinion, and ultimately keeps them coming back to us and kind of staying attached to the firm. And ultimately, I think we've done it for 20 years. I think that's the reason why we've been able to do it for 20 years and have a lot of these folks stick around, is they respect, they know that we respect their time, and they know that we're trying to actually, add value to them, and we're not trying to just waste their time.
I love that. So I wonder, when you mentioned like the CXO would come into CR's office, what kind of question would they be asking the startups? Like, what are some like insight that you feel like they actually care about?
Yeah, a lot of times. Let me phrase it this way. So first, it depends on the stage of the company, right? Because sometimes we'll bring in a seed stage company, and that's just more for, honestly, like, learning purposes. As much as we think, as much as we'd like our seed stage companies to sell to a Fortune 500, usually both sides are not ready to kind of engage in that way. But at least it's a good way to get the conversation started. And then we have some companies that are more at scale, where it's more of like a, hey, you can actually use our product, and you can go from there. So typically, I think the way it ends up working is the company will pitch their solution, talk about the problem, talk about the product, all that good stuff. And usually the CXOs will ask questions about, hey, how do you think about this? How do you think about that? And the questions that the CXOs typically come up with, and the thing that the very early stage companies oftentimes have a hard time handling is, like, I get you're solving this problem, but I'm a unique company. How do you kind of fit your solution to solve my specific problems? And the companies that are able to answer those and articulate those questions well, they're the ones that you usually see these conversations move forward the fastest. But I think it kind of works in two ways, right? So, like, for these very early stage companies, they're talking about things that are so far and cutting edge that oftentimes these CXOs haven't even thought about. And so, like, you'll kind of have these situations where the CXO will hear the pitch, they'll kind of be like, sounds good. And then, like, 2 years later, be like, hey, that company that you showed me 2 years ago, that thing was super interesting. We're actually dealing with that problem now. And so then we can kind of reintroduce that. So it's kind of, so it works on a couple of ways. Just to sum this up, on the CXO side, it's showing them kind of these new trends and these new ideas. And even if it doesn't solve their problem today, it's a good way to get them introduced to the problem. And ultimately, those can convert into, selling conversations down the road. And then for the startups, it just gives them a really good flavor of like, how do you actually deal with the Fortune 500 in a little bit of a more friendly setting? And how do you get them to react? How do you get them to how do you get your product to resonate effectively with them? And so that's kind of the way we use it. It's kind of coaching for our companies in some ways, and then also showcasing kind of what's possible to these CXOs.
For sure. I wonder in terms of like when you are, I guess the other question I had was like, since you guys have like 100 CXO on board into this like program, and like, do they interact with each other? Is there a Slack channel, or like, how do you kind of like engage the people that's in the network to kind of like benefit from the network as well? Or just like in general, like, how do you kind of like stay in touch to make sure that each connection is warm? Obviously, if they come from a different like city to the Bay Area, and then you line them up with a specific set of startups. But if 100 people like that's like coming to your office that's basically someone have to be in your office every 3 days. So how do you guys like kind of like systemize this approach basically?
Yeah. So the things that we so the way we kind of handle that is we have two kind of tracks for content. So one, every quarter we'll put out some sort of like, host a dinner, host some sort of event where, folks that are in town, we'll kind of have them join us. And that's a good way for everybody to get together. And usually we'll do some sort of like roundtable discussion, something like that. So those are kind of higher frequency, lower effort sort of way to put people together. Just do a simple dinner, but the idea is just bringing people together. The other thing we do every year, we host a CXO summit. And so what we do is we bring almost everybody, even the folks that are out of town, to to Palo Alto or kind of somewhere in the Bay Area, and we host a full day's worth of content. I think if you saw on the website, you saw Jensen's picture. So Jensen actually keynoted our CXO summit in 2016. And just had some phenomenal speakers. Last year we had Bill McDermott from SAP kind of keynote the entire event. We had Ryan Roslansky, the CEO of LinkedIn. We had Christian Kleinerman, one of the EVPs at Snowflake. And I mentioned these names basically to kind of talk about the sorts of content that we try to put together. And so basically it's call it a half day, 3/4 of a day worth of content. We'll have great speakers like the ones I just described. We'll have a bunch of panels. We'll have presentations from our companies, and then we'll do like a full networking happy hour sort of thing after, and obviously give them chances throughout the day to interact with each other. But that's kind of our flagship event. We get a ton of interest in that. We've always had good feedback from our community on that, and that's one of the big things that keeps everybody engaged and is a really, really good way to get everybody to stay close to the Sierra brand every year. In the meantime, we also, we'll get on the phone with these folks and give them a call every quarter or so and just kind of catch up and see how things are doing. And I mentioned these are all personal connections, so a lot of them we're on texting basis with these folks as well. And so we just try to we try to keep the connection warm throughout the year, but we systematically have kind of content programs that we leverage to basically keep them engaged and keep them coming back.
I love it. I wonder in terms of I guess like speaking of like building these relationships, and like what are some insights that you feel like since the last time you chat with these executives beyond I guess like the insight you just shared was they care about like a very specific solution for their own companies. And like, is there any particular like AI trends that people are really passionate about? And in terms of like enterprise adoption, like whenever I chat with anyone who is remotely close to enterprise, like they don't adopt AI. Like I feel like it's not like they don't adopt AI. It's more towards like, unless you're in one of the really high, fast growing AI companies, a lot of the people would be just hiring Deloitte or McKinsey to like do some sort of like internal audit, and then they would recommend that like, you're not ready to adopt XYZ technology. You have to do XYZ before you adopt these things. So I guess like from your perspective, like from the executives, like where are they at in terms of like adopting AI? And I was also at this is like a Jason question, but like I was at the Wall Street Journal Live. Like it's like their private summit like 2 months ago, and I was sitting with a Series B founder from the East Coast, and I was asking them like, "What do you think about these like one-person billion-dollar company?" And then they laughed because they think like it's like because of like they think because when they're selling to enterprise, each specific company demand someone to be on site with them. The cost is like from your company to like send like an engineer, send someone to be on site with their engineer to like adopt your technology into their company. Like so basically you have to hire like a full-time person to like make this function each time you're sending someone. So um what's your thought on these like, one person company that's selling to the entire like enterprise stack and stuff?
Yeah, let me break that up into two parts. So kind of call it the state of where enterprise adoption is when it comes to AI. I mean, look, like you said, it's still early, but I think you'd actually be surprised. I think a lot of enterprises have actually deployed some form of AI, even if it's internally. So I don't think many enterprises have deployed it externally to customer-facing use cases just yet. But I think a lot of folks have actually deployed it internally. I mean, I talked to a lot of the folks that we've talked to. I mean, many of them have deployed Glean as an example. A lot of people have deployed like chatbots. A lot of people have their own like OpenAI instance. So I think a lot of people have deployed some form of AI internally, but I think they're still trying to figure out the kind of going back to the context comment earlier, like it has to work 100% if you're in some of these regulated industries before you put it in front of customers. And even if you're not in a regulated industry, you can't have your AI saying and doing crazy things. And so for a lot of people, they're still trying to kind of crawl, walk, run their way to being able to deploy AI in front of customers. So I think on that front, it's still early. We'll see how 2026 plays out. It feels like people are optimistic about getting these things out there. Still probably need some tooling, but I think people are optimistic. I think people have already tried deploying stuff. And more importantly, I think people have already built enough agents. They know how to build the agents. And so now it's about kind of putting the finishing touches on these things to actually get them into production. So and I also would add the other nuance here is I think I saw the stat yesterday. I think of kind of all the different industries, for example, healthcare, I think almost 40-50% of health systems have adopted some form of AI, whether it's like an AI note taker or whatever. And so some industries have gotten a lot farther ahead in their deployment of AI and their use of AI. And so I think it's the deployment and kind of the usage rate is different depending on the industry. But I think across the board, we're finding that everybody's excited about AI. And to whatever extent they've deployed some sort of AI, whether it's kind of more back office internal, if not customer facing so far. So that's kind of the general state of AI from our conversations with our CXOs. And then to your other question around this single person $1 billion company. I mean, look, I think when the AI wave first came out, I think we were all very, very gung ho, and I think we all thought it was kind of inevitable to happen. And I'm not going to sit here and say it won't happen. I do think in the enterprise, though, a lot of these things are very relationship driven. And if I kind of just see what's happening with a lot of the startups that we see with this whole forward deployed engineer sort of model, I don't know how probable it is that you're going to see, single person $1 billion companies. I think time will tell. My take would be that for it's unlikely for us to see that. I think just the level of effort and work it's taking to get these AI products to not from 0 to 1, but to like get them to actually like be in production and be reliable in production. It is hard. It is not easy to do these things. And so I think I don't see the single person $1 billion company kind of thing as super likely. And especially for the enterprise. I mean, oftentimes enterprises want to know that you have a lot of, you have the people and you have kind of the resources and all that good stuff to handle them and handle their needs. And so I'm not even sure they'd be comfortable buying from a single person $1 billion company anyway. So, but yeah. So anyway, I think possible, but not probable.
I totally agree with you. I feel like it would be really challenging to like really having very tailored solution for
Yeah.
a ton of different like Fortune 500 and then just by yourself. um, I wonder. So like since like I feel like we talk about like briefly we talk about like the insurance tech space. I feel like you also invest in like a very general, like, the enterprise app aspect or like, other vertical AI and digital health. Maybe we could talk about like, what are some trends that you're seeing in the vertical app space or digital health space?
Yeah, sure. Maybe let me start with digital health, and then I can talk more generally about vertical. So, look, I think in digital health, I'm very excited about the opportunities for clinical related workflows. I think in the last couple of years, we've seen a lot of administrative workflows being automated away, whether that's scheduling or prior auth or kind of those sorts of workflows. Frankly, I see a lot of those companies. I think it's obviously a big problem. So there are so there's lots of competition. But to me, I think the next step is going to be how do you actually leverage AI? How do you give it to the doctors to actually help shift the cost curve? Ultimately, at the end of the day, the biggest problem in healthcare is quality of care is not equal to cost, and I think we need to find better ways to help people get better quality care at lower price. And I think that's what everybody's working towards. You're not going to be able to do that unless you're in the clinical pathways and you're in the clinical care workflows. So that's an area as it relates to the provider world that I'm excited about and spending time in. I think OpenAI, for example, is even starting to get into this from the consumer side. They're allowing you to, connect all your wearable data, and they want to start providing a little bit more health, give you some advice around healthcare. And so I think even OpenAI is heading in this direction. So I think this is something that you're going to see more and more health systems kind of think about. It's a hard problem. It's going to take time. The level of accuracy for all this stuff is going to be super, super high. I'm well aware of the challenges, but to me, that's where the multi-billion-dollar companies are going to be built when it's all said and done. On the pharma side, we spend a lot of time there as well. We think there's just a ton of opportunity, whether it's around sales and marketing for pharma or manufacturing or clinical trials. We think AI should absolutely be being used in these large pharma companies, and so we're spending time kind of trying to figure out what are the opportunities there, and so that's another more broad area that we're spending time in. I think again, as it comes to verticals, I go back to my system of context comment earlier. I think every vertical and every industry is going to be impacted by AI. There's not an industry or vertical that I think is not going to get impacted by AI. So just start there. I think at the end of the day, it's all about is there a founder that really deeply understands the pain point uniquely and understands the customer uniquely enough that they are able to get a set of data that context graph and gives them a unique way to go and access that context. For the founders that are able to do that, I think they'll dominate whatever vertical they go after. And so to me, I'm excited about a lot of different verticals, but it's all about that vision to build that true system of context that I'm keeping an eye out for.
For sure. I wonder from the healthcare ecosystem, so like what I guess like another question, like whether it's like healthcare. So I'm thinking about like there's a company I have like invested in called Invenco Robotics, and they are essentially like they are doing like robotic arm for like picking up the medicine because nurses spend like 30% of their day to like just like literally transferring one medicine to the other room, and like I don't picture my grandchildren just like sitting in the room and then like people will literally a person have to bring some stuff to them. So I wonder when it comes to like the physical robotics area. So like I know that like, you guys don't do any consumer, but like right now CS is happening. Like what are your thoughts on like the physical AI realm of things? Like is there something that you personally are interested in? I know that you guys primarily do software, but just in case, I guess like is there any particular software that you feel like would help the physical AI space as well?
Yeah, we do a lot of robotics, investments. B, we think there's a pretty big gap in the robotics world right now, with where foundational models need to be to actually enable a lot of these use cases and where they are today. And so one area that we spent a lot of time thinking about is the data side of it, and companies that can capture or create and capture unique forms of data to help train these foundational models on the robotics side. So kind of at that infra layer, data layer, we're spending time thinking about that. We've also invested in companies, call it at the more application layer, maybe just a step above the infra layer, but right below the application layer, that are helping companies program robotics more effectively. That's a big change that we've seen as well. The ability for an average person to go and program a robot to do something, leveraging the computer vision, automated path planning, as well as like text to using free-form text to actually create code to help run a robotic program. We think that that's a big opportunity in the enterprise in particular, and even in consumer. And then I think the last trend we're seeing in consumer and this or in robotics, and I think this is interesting, especially in the consumer world, is that two things have happened. One, the quality of electric motors and kind of all the components have gotten a lot better and a lot cheaper. And two, with all the new AI technologies that are coming that are allowing them to control these arms much more effectively, the cost of a robotic arm or the cost of building robotics is coming down dramatically. And I don't know kind of how or which use cases yet that'll be the first to come up. But I think the fact that the cost is coming down to create really high quality robots is absolutely going to change the way people think about it and where it's going to be used. And so for us, we kind of see this trend of cheaper robots coming, more robots coming. And so we want to play in the layer that's going to enable that trend to happen. So data is one, robot control is another one, and then we're also spending time looking at some foundational models even around robotics.
For sure. Maybe we could talk about so since you mentioned about there is a lot of robotics companies that you guys are looking at, and then there is the foundational model are still needed to be updated, and maybe we could talk about when it comes to, since you guys also invested Series A, so from early stage to actually raising money for your Series A, what are some benchmarks that you have to hit before raising? And is there any particular valuation cap that you guys are just kind of filtering through? Because right now sometimes the AI companies could be valued at crazy price at all times.
Yeah. And are you talking about robotics specifically, or you're talking about just more generally?
I think generally also I feel like the robotics companies are very, I would say sometimes because they require such an intensive capital, and then people, I feel in the robotics industry it's really actually hard to raise each time, because they innovate a lot slower than software, and then they require so much money. And is there any differences in your observation that there is the valuation is different, or I guess the amount of capital that they required for each round? How do you kind of evaluate those things?
Maybe let me start with kind of the state of valuations and how we're thinking about it. I mean, look, I think everybody knows that rounds have gotten expensive. I think companies are raising a lot more money than they were before. Our kind of MO has just been to go earlier. We try to find companies that meet founders at the earliest stages, try to get an early work with them from day one. And that's kind of our way of maintaining our check size and ownership targets in this environment. And look, I think at the end of the day, one of the things that's been tricky about this world that I think a lot of people are seeing is the benchmarks for raising an A are kind of all over the place. In some cases, it's just you see these companies going from 0 to 1 to 10 and just hyper scale happening, and that's kind of that's a method that's a criteria that people are using to justify these large rounds. I mean, other times it's no revenue, no product, and companies are raising tons of money, but people just are super excited about the team, super excited about the vision and the opportunity, and so just some categories are seeing just a ton of capital coming in. And then there's also this whole strategy and notion of king making, right? And we're seeing the large funds try to king make in certain categories. And so for us, we don't play at those, those very large rounds. We're early stage investors, and we really try to focus on that seed to Series A or pre-seed to Series A kind of stage. And again, by getting involved with these companies at the earliest stages, that's a way for us to control valuation and make sure we hit our ownership targets. And sorry, I forgot your second question.
The robotics side.
Yeah. Oh, right. Yeah, sure. Actually, it's been quite interesting. I feel like in the robotics world, it's taken more time, but it's been interesting to see how much money a lot of these companies like Figure and Plus One and all these companies have been able to physical intelligence have been able to raise so far. I think they've all been again, this kind of goes back to that second bucket. Even without a ton of revenue traction, I think people see the potential and people see the opportunity in these categories, and so you're seeing them. You're seeing them try to just jam as much money as possible into these opportunities to get them to scale. Frankly, I'm not sure. I'm a little skeptical of some of these these things, just with how much money is going into it and how early they are. I think there's a little bit of a mismatch there, but I do think that compared to the old world, it does feel like with again the cost of building robotics coming down, the effectiveness of these foundational models improving, it does feel like your ability to iterate and create new products in this category is increasing pretty dramatically. And so from that perspective, I can understand why people are so excited about the category and why people are spending so many dollars to try to get these companies to succeed. But to me, it just feels like there's still a little bit of a mismatch there between kind of stage and how much capital is going in.
For sure. I want to be mindful of time. Maybe we do one real question and then run the fire round. So another question, I want to give a plug for your podcast as well. You and Arvin have a podcast. Maybe if you want to plug the podcast here, and then maybe we start with since I actually figure out who is our second together guest. So the first one is Bob, the former CEO of Snowflake, and the second one is the Stack Overflow CEO.
Yeah, that's right.
Our guest on our show as well. So maybe we could talk about what were some lessons that you feel like you've learned from all these leaders as well.
Yeah, sure. So maybe just give a short plug for the podcast. So Arvind over at Geodesic and I, we run a podcast that we have monthly episodes. It's called the Unpacked Podcast, UNPAK 3D. We're on YouTube and Spotify, Apple. So come check us out. But the idea for the podcast was there are a ton of podcasts out there that talk about the stories of companies and kind of how they were formed, but we didn't see a ton of podcasts out there that ask the leaders of these companies the tactics that go into everyday, the tactics that go into building companies from a day-to-day basis, the hiring and building culture and go-to-market strategies and things like that. And so given that I'm an early stage investor, given that he's a late stage investor, we felt that we had two pretty interesting perspectives on company building. And so the idea was to bring these really great founders and operators in and kind of ask them these tactical questions and really try to serve as a playbook for other founders that are building their companies to help them along in their journeys. And look, I think when I look back at all of our podcasts, a couple things stand out. One, I think culture is really important. I think the best founders and the best leaders always have a very clear vision as to what the culture of their company was going to be from an early stage. It defined kind of the sorts of people they brought in, the people that they targeted, how they hired them, why they hired them, how they retained them. So I think culture is a really, really important and underrated sort of characteristic of a lot of these founders. I think the second thing that I find that was quite interesting is that for a lot of these founders, or a lot of these operators, as they've gotten to scale, the tactics around GTM differ, and that's kind of an obvious statement. But I think for them, the thing that they've typically figured out is that you got to just get the right people in, and it's like for every stage of the company, it's the right horses for the right courses. And so the best leaders have been really methodical and tactful about how they bring in the right people to help them kind of adjust for that next phase of growth and the next stage of growth. And so I think the ones that kind of get the culture and the people piece of it right, that is what makes them very successful leaders and operators, and ultimately allows them to scale.
For sure, I totally agree. I feel like hiring has becoming one of the biggest I didn't really imagine. I feel like I feel the same about my podcast as well. So I feel like when you get to a senior role, 99% of it is managing people than managing a specific problem. And how do you incentivize people and then finding the person to join? I feel like it's a whole set of problems than when you do your own thing. So quick 1 minute fire round. So what's your favorite book?
My favorite book, I really like 0 to 1. I think for early stage, I think that's for early stage investors. I just find that it's like a good reminder of what to focus on, and especially with all the hype and all the noise that we're seeing today, I always find the message to be pretty clear.
For sure. Who would you invite to a dinner party?
Oh, that's a good question. If I had to pick today, I would probably pick probably Dario from Anthropic. I always find Anthropic to be a really impressive company. They've managed to carve out their own niche in a crazy world dominated by tech giants. So I would say Dario.
Who made the biggest impact in your career?
Ooh, that's a very good question. Well, I guess I would have to say my partner Mark, who I met before I joined Sierra, and gave me a chance, and that's obviously had a very big impact. So my partner Mark Fernandez here at Sierra.
Where can we find you outside of work?
Big golfer, so usually either playing golf, watch a lot of sports, and then spending time with family.
Love that. Well, Vignesh, thank you so much for coming on the show. It was such a fun chat.
Thank you, Grace, and enjoy the rest of your time in Hawaii.
Oh God, I'm coming back today. So, oh my God.